Good morning, you were Jade here, 91.1 Hot FM Hot Property. We're talking all things real estate and property in here this morning. Mel Cayley from Direct Collective and Paul from Broker Co hanging out this morning. How are you, Paul?
Hi Jade, how are you?
Geez, you're looking all refreshed. Look at you. Had a few weeks off,
I had
hear?
a few weeks off, so all recharged for 2024 now.
Gee, I reckon all the lenders and brokers had a tough job in 2023. It was a weird year, don't you think?
It was a really tough year, I think, for everyone.
Especially you guys, though. I feel like a lot of people came to you with their problems. You know, can you help me refinance? The interest rates are too big.
Lots of refinances and purchases, and people generally trying to get a better outcome for what they're doing.
Well, I think too, because we're a little bit more educated these days on how we can not push our banks around, but how we can negotiate a little bit more with our rates and stuff with the banks. You know, we quite often talk about it on the show. Mel, we've said in the past, you know, contact your bank. See if you can get that percentage lower.
Absolutely.
Have the conversation.
Nothing to lose by asking. And look, there's so much more competition in the market and competition's continuing to increase. So banks are working harder to win clients. Some of them still need to work harder at keeping them, but you know, you can apply that pressure by asking. And
now let's talk about 2024 because everyone's feeling refreshed. We've all had some time off. We're happy to get rid of 2023 and look towards 2024. Economists are saying a lot of different things. Now, let's talk about interest rates first. The latest from what I've heard is now we will expect some RBA drops in the interest rate, but more towards the end of the year now. Now, Mel, we've been talking about this on and off on the show. You were always calling it would start to happen in 2024. How do you think this is going to impact?
Well, I think it's going to open the floodgate that we've been talking about. You know, we're going to see price rises now. We've already heard lots of commentary around price rises in the market generally now, which we've been saying for some time, which means it's going to be higher than what we thought. And one of those key things that is really going to drive pricing is more people coming into the market as rates come down.
Paul, something interesting. When the rates do start to come down, I think because we need to talk about the assessment rate. So when you're going to get a loan through you guys, you come over, you say, Paul, look, we're trying to get a loan for this property we're going to buy. Even though the cash rate is at a certain amount and the interest rates are at a certain amount, that's not how you'll get assessed by the lender though, is it?
Yeah, correct. There's always a buffer. It's generally about a 2.5% to 3% buffer depending on the lender.
That they whack on top to see if you can...
So given that the rates are currently at their all-time high, the assessment rate is through the roof. It's nudging, 9.5%, 10%.
So the lender will basically calculate whether you can make your repayments on this loan, but they charge it and they base it on 10%.
Correct.
And which is pricing a lot of people out of properties.
It's pricing a lot of people out. So as rates start to come down, loan affordability increases for everybody.
So you'll obviously get a bit of a rush when that happens. As soon as those rates start to come down?
Yeah, for sure. People will be definitely interested in watching those rates come back, and that's when the competition will come back into the markets between the banks as well.
Do you think the banks get quite competitive? Like, do they like to sort of try and outdo each other, or they don't care?
Oh, they do, but they generally take turns in the cycle, whether it's intentional or not. But there's always someone will have specials running, and then that'll inspire all the other lenders to follow the same course of approach.
Well, they were doing a lot of cash back. Come with us, put your loan with us, we'll give you $3,000 cash back and all this stuff.
See, that's all wound down now. So there's not a huge amount of that. There's a lot of retention activity happening within the lenders, but we just suggest talk to your lender, and then feel like shopping that around, you're more than welcome to contact a broker or another lender.
Because I mean, at the end of the day, as a broker yourself, you sort of take that hard work out for people in terms of trying to go around to all the different banks.
Yeah, absolutely.
I mean, that's what you guys do, right? You sort of try and find the right fit for the person.
Yeah, correct. So we've got access to 50 plus lenders. So depending on your financial situation and what you're hoping to achieve, we leverage off the policy of that lender to get the best outcome.
They're like magicians sometimes. We had a client, South African Income, who went to 3 lenders. Everyone said no. These guys at Brokerco were able to unlock $800,000 of lending for them. So after 3 lenders had said no, given their experience and the breadth of lenders they're working with, it's a fantastic outcome. So a bit of a game changer, and that's what you want out of a broker, is someone who's going to do that work for you.
I'm all for brokers. I've always used them. I think they're fantastic. So, all right. Well, that's good insight into 2024. Let's see what those interest rates do. And in the meantime, head over and see Paul and the crew at Brokerco if you want to rework what you've already got happening. See if you can dwindle that down and save some money in 2024. Now's the time, I think. All
Absolutely,
right.
Jade. Absolutely.
Yeah, for sure.
All right, guys. Enjoy your Saturday, Paul. Thanks so much for popping in.
Thanks, Jade.